waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets closed. Balance they slow down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Damn, that crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Secrets is a vessel, the compass is true.
We're gonna run.
Breaking every barrier,
We're gonna run this at 7:20 today. Okay, how will you do?
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the
Hi guys,
Fibonacci
good
start
morning.
to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights
Oh,
and early
morning.
Leading the trends and the volume on it. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen, navigating depths where the giants are seen. Seacrest the name, the gold standard inside, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Happy Monday and good morning, good afternoon to all of the people viewing the live stream, and of course those of you that will be tuning into the recording. What a weekend we had. So diving straight in, we had that Supreme Court rejection of that previous tariff structure, which obviously Donald Trump tried to get pushed through. Now there's obviously already that president's previous kind of immediate pivot to a 15% blanket rate, which has kind of reintroduced fears of a trade war and somewhat sticky inflation. So very interesting weekend. A lot of new kind of thematic reports released over the weekend. There's that decent report that's been released by Seacrest. So if you want to see my views on that report, head over to X and you can actually check out what I've wrote in response to Seacrest. Now, of course, Seacrest have got some incredible thematic views. This one does feel like it's more designed and generated for a marketing play. And quite frankly, when it comes down to global macro thematics, we rarely ever see that feed through into the buy and sell and the pricing of the market. So take a look at the Seacrest report, dive down that rabbit hole if you do so need to. But just remember, rarely does global thematics like this play out into the big macro. Realistically, it comes down to the micro consignments of a market and previous pricing that we actually get big drives into new overall trend shift. So take a look at the note, take it for a pinch of salt, and focus on what you need to focus on, and don't get caught up in these gurus and influencers saying how important this note is, because while Seacrest are incredible, it will probably just distract you. And good morning to everybody that said good morning so far. Now, leading on to the ruling from the Supreme Court, we've also got the Fed dilemma. So last week, the FOMC minutes, which I'm not sure if any of you have really touched upon, they revealed quite a balanced committee. Some of the members are suggesting that there could be a rate hike if inflation doesn't cool. But the current market pricing shows that that first rate cut, like we said on Monday and Tuesday, realistically still isn't expected until July 2026. So what we're going to do today, markets will be a little bit quieter. I think we'll have some thinner liquidity and exaggerated price swings, again, because certain markets in Europe are closed. Europe isn't closed as a whole, but certain countries in Europe are closed, as well as we had Japan and China closed for the holidays as well. So whilst we'll be trading out into very liquid sessions across Europe and into the US, we could just see some thinner liquidity just because of those countries that are actually closed for today. Now, I don't expect to be too bad because, again, the majority of the liquid markets will remain open, and they are still open today, so we don't have to worry about it too much. Transitioning out into economics and macros and fundamentals for the week. If you can see on my screen in front of me, a fairly quiet week. We've got Germany's IFO that's just come out. It came out, what's the time now? It came out about 3 to 4 minutes ago. It actually came out better than expected. So the forecast was 88.4 and the actual came out at 88.6. Now, that's also better than previous, 87.6. So a nice full digit move to the upside, which shows that the business climate is improving, that we are seeing somewhat optimistic outlooks on current business trade. Now, one move doesn't necessarily make a market. We kind of need to see that continuation. But again, that's a positive start to the week. Tomorrow we have realistically zero red impact, red folder, high impact news. Wednesday, again, we just have the Germany's GfK consumer confidence, but again, nothing big. Thursday, nada. And then Friday, realistically, the ones that you want to be watching, if you're trading primarily the US markets, will be that USA PPI MOM. Outside of that, nothing much. Got Canada's GDP growth, Germany's inflation rate, India's GDP growth rate, and France's inflation rate as well. But France's inflation rate is pre-UK, post-Frankfurt. India 10:30 UK time, 1 o'clock Germany, and then obviously 1:30 Canada and USA data. So not much crazy events this week. And apologies if I sound a bit stuffy, a bit nasally. Hay fever has started to kick in here in the UK, and don't ask me why, because it's February. We haven't even transitioned into spring yet. So, but there are a lot of flowers around, a lot of flowers indeed, which has of course caught me right up. So I've already started taking some injections to get rid of that. So hopefully it'll be gone and cleared up by the end of this week. But my eyes are itchy, my nose is stuffed, but it doesn't mean we don't show up for the markets. It's just a little bit hay fever. We take eye drops, we take the right prescriptions, and we take the best caffeine, even though caffeine isn't good for getting rid of whatever you want to call this hay fever. So, bit of a switch up as well. You'll notice that it looks slightly different in my office today. So my screen, I've switched to my left screen for recording, and my charting will now be on my main screen. So when we're charting in a moment or two, I'll be looking to the right. My head will be over here, so you'll see the left side of my face. And I'm just trying to see whether that helps, one, the camera, two, the quality of the stream. So now we're streaming on a 4K flat 32-inch monitor with a 1080p camera from the left, and I think it might have been something to do with that, because I had a even though I had a 4K camera on a 4K screen, it's very difficult to stream apparently. I haven't got a clue why. Don't ask me why. If it says 4K on it, on a camera, and 4K on a screen, you'd expect it to be decent, right? But for some reason or another, a USB 3.0 port plugged into the motherboard for a 4K screen and a 4K camera just didn't want to work. So let's dive into the indices. Does anyone have any comments, any questions, any queries about the markets? What happened last week? Maybe what happened in economics, or any comments on the Seacrest report at all? Whatever you've got, fire the questions, the comments, the queries in the chat, and we can cover them throughout the session. There's no problem whatsoever. Now, in terms of indices, before we actually dive into the technicals on the chart, let's talk about where the S&P and the NASDAQ pretty much are relative to the market. So overall, we saw that flat end to last week's move. Investors are pretty much waiting the Nvidia call earnings later this week, which will realistically be the bellwether for demand in the sector. We're seeing huge growth and acquisitions into Nvidia. Nvidia are obviously doing a huge investment out into specific sectors, but this will be what we call the ultimatum. But they did finish flat last week. Very volatile session on Friday. You got whipsawed around pretty aggressively during Friday's trading day. The Nikkei overnight. So the Nikkei 225 closed down 1.1% before that break. And the DAX and the FTSE are trading slightly higher this morning. Now that comes down to the fact that the euro has provided a little bit of strength on the tailwind of that European purchasing power that we saw earlier this morning, as well as that 15% tariff news, which does remain a little bit of a long-term drag on the indices. Again, somewhat uncertainty, somewhat orderly exits out of the market, trying to figure out where they need to be best positioned coming into the next quarter. So let's head over into the 4 hour of the S&P. I mean, it gets really messy. Obviously, you can see it's quite messy anyway, because I leave all of my analysis on these live streams. I'm going to decide it's going to be a month-by-month basis, because I cannot deal with these messy charts. It really does affect me. So we'll clear it all up as the end of the month. We'll run a new month clean. We've got all of the data there saved, so if we need to look back historically in February or January, we can take a look. But how did we end up? So look at Friday. We had that huge push up to the upside, right? So what was really interesting is we were talking about longs in the live stream. Now, had we have kept that long on, it was a paper trade. So had we have been in that long, we would have actually been stopped out. Now we'll go down to the lower time frames. We'll look at the exact levels. We spoke about that supply level that could have potentially held. Obviously, momentum and demand was in control, but we were going long into a supply area, which we said is risky, but we're going to play the idea to show you if it fails or not, because otherwise we can't be held accountable for these ideas and these analytical ideas. So we had discussed that long coming into the London session, which was off of this supply area here. Supply respected, in line with that supply chain. Supply held, and we traded all the way back down into demand. Now, demand did not fail. Demand was respected. Coming into the latter part of the session, trading into New York. Huge push to the upside. Longs were very much aggressively in play on an intraday scalping basis. And we came into the close very undecided, huge doji candle at the very top. And of course, on Sunday, we opened up very aggressively to the downside. So whipsaw on the day. Now, it just shows that we're continuing to be contained inside that higher time frame range. This could go on for a while. Overall, I'm still looking for that $7,000 price point. That's what I want to see, that 7,000 price point on the S&P. That's what ideally I'm looking for. I'm not going to keep longing things just for the fun of it. I will be long. I am long. And on a long-term basis, I'm happy to stay long. But intraday, you play with the ebbs, you play with the flows, you get long, you get short. But you have to remain conscious that being short has unlimited risk, okay? And limited upside. So whilst we are trading inside this range, we do obviously have to be careful of being ignorant to the whipsaw. Now, coming down into the 60-minute time frame, just to give us a little bit more color, you can see it's quite clean. That rejection off of that supply to the upside that we were referring to in the morning on Friday had that big rejection, came into demand. Demand was obviously respected, and we traded higher. And we're just trading inside those two ranges. So for me, nothing done yet. I wouldn't be trading inside this just yet. It's too tight for me to get involved. I would want to see price action break out of this really for us to continue in either direction, be it short or be it longs. Initial targets will realistically be about 6,900, 6,909s, and then we'll see what kind of price develops out from there. It is apparent that demand does remain in control, and that's what we were discussing on the Thursday, on the Friday, and it's still very much the case at the moment. But equally, obviously, supply is giving us a reaction off of, that kind of buy to sell pivot, which is essentially nothing. For me, the bigger reaction and area that I'd like to target is that extreme at 69.50, 69.60s. But again, we've tapped that higher time frame 7,000 to 6,990 level 4 times now. The more times it touches, the lesser it holds, the weaker it becomes. Sorry, I lost my train of thought because my eyes are itching and my nose is really tickly right now. So there is still that chance that we could hold off of this 690, 6910 level, which is an area that supply is. But do I think this high is weak? Based on the way the markets are, yes. But again, range highs are weak, range lows are weak. They will be respected. So if you're long from somewhere inside here after the momentum continued, just be mindful that we could need to take profit up and around that 6909 level. Hold 80%, take 80% off, take 90% off, however you see fit. Leave 10 to 20% running, because you may get that runner. You may get that 6950, 6960, maybe 7,000 level this week. Markets will be uncertain, of course they will. However, you have to trade what you see, and as long as it matches your edge, I can't argue. I can't sit here and tell you you're wrong. And that is not what this live stream is about. So if you're long, I'd be looking at understanding what's inside here to the left. Why does this level keep holding? Is it purely because we've got this previous area of demand, this sell to buy pivot that's actually giving us that reaction? If you can look, I'll draw a thin one just so you've got an idea. Like this level here. Let me color it in as well. I'll color it in just for the purpose of this chat. So we've colored it in red because it was a previous area of support. We had a pivot demand. It's now turned into resistance. So you can see that price is struggling to break this level, which if you go back, if we just keep extending it, you can actually see it has pretty much been the mean for a long time. It's caused reactions, resistance areas, support levels all the way through since pretty much December of 25. Actually, it goes back even further. Well, it still goes back. Wow. October. So that is pretty much a level that's seemingly been respective. So 6,900 has been an area that's been constantly giving price a reaction. So we could, again, continue to see further reactions in and around that 6,900 level. So we'll leave it on our charts for now, because if we're long, we want to be conscious and cognizant of that 6.9 level. If we break, retest, continue, then maybe we've got a little bit higher in ourselves. Let's go down into the M15. We'll talk about that long idea that we was having a discussion on. So let's go into it quickly. So supply was controlled to the right-hand side. We had a break to the downside. Demand was respected. So demand overall was in control. We was expecting price to trade up or attempt to try and trade up into 7,000. Demand was in control. We were trading off of supply. This was our last point of call. So if you wanted to be long because of demand in control, because of momentum, and you wasn't really interested in supply, that would have been your last port of call. And it proves the point that when you're trading from a last port of call, even if it's with momentum, if it's reacting from a resistance area or reacting from supply, more often than not, it's a low probability trade. And this proves the point. So we had a nice reaction off of the level. We've traded with momentum to the upside. We've got about half an hour available to us, roughly. And then price has reacted from supply after taking that previous reaction higher, and we've traded to the downside. Thus, that trade would have been stopped out. Again, comments to be made. When you're trading away from a resistance area or when you're trading away from a supply, it's traditionally known as your last port of call. It's a lower probability play, even if it's with the front leg, even if it's with momentum, but because it's trading off of supply or it's reacted off of a resistance supply area, it's lower probability, and the reaction realistically would lead you to either sitting on your hands and not taking the long, maybe considering taking the short. Now, what then went on to happen is obviously price traded back down. We've come into the extreme of demand, which you can see here. Price has reacted from the extreme of demand. We've then continued to trade to the upside. Now, that huge engulfing Marabuso candle was at the US Open. We had a huge push to the upside, and we continued pretty much throughout the US session into the close bullish. And then, of course, as we traded in overnight to the to roll over, it's just started to trade off. Now, you will traditionally see that. You will traditionally see rounding off of the markets because traders, investors going into a weekend around a lot of geopolitical instability, macro fundamental uncertainty, and different tariffs, policy discussions, and uncertainty around partial government shutdowns cause investors and traders to take risk off of the table so that they don't have any weekend overnight gap risk presented on Sunday's market open. So they'll start taking their profit or start taking their positions off of their books and start closing down a lot of their risk as they come into the close of the week, so that they can sleep easy, so that they can enjoy their weekends, and so that they don't expose themselves to any unnecessary risk on their portfolio, their pad, their book, whatever you want to consider it, quantify it. So there's two key lessons in that. So hopefully we can clip that down into a short clip. I'm just trying to see the time, about 20 past. So I'll remind my marketing team to clip those pieces and lessons so that we can actually put them into some shorts for you across our social medias. So where are we today? Demand obviously in control. We've taken this. We've come back into the extreme of demand. Some will say that we've tried to use this as liquidity. I'm going to use this just for now. Let me get rid of the background. So demand. Stepping into the market, what time is this? 5 o'clock, 7 o'clock. So Frankfurt open. For me, the move already happened. The move started around 5 to 6 a.m. UK GMT. I'm not trading at that time. I'm traditionally either at the gym or having my bacon and eggs. So markets obviously traded to the upside. Realistically, you're kind of looking at this area here as first pivot on supply to be taken. So this area here, we had a reaction, price then traded up, price traded down. So you wouldn't have necessarily got anything on your M15. There may have been something on an M5 or an M2 or an M1, whatever you trade. I'm not here to judge. I'm here to call education and analysis. That was a big one. But market overall looks like it wants to trade back up into that 6,900 level at early doors. US will really kind of pave the way as we trade into the week. And I'm sure many traders on the western side of the world that will be waking up pre-US, pre-Canada to get involved in these markets will obviously look to see how to drive this market, whether we're going to push the prices down following the over weekend risk, or we will obviously look to base and continue higher. Now, just looking at where we are, obviously markets really started to expand during that beginning of that session. We had this kind of megaphone pattern. Obviously, it was a bullish theme, bullish entrance, bullish flag into that movement, and obviously we've had that expansive megaphone range out to it. And obviously, we can trade from the extreme of supply, we can trade from the extreme demands, but whether you wanted to or not, again, subjective, entirely up to you. For me, you want to see the break. If you want to get continuations, excuse me, on the M5, you wouldn't have got it. Maybe on the M1, I don't know. We'll talk about it in a minute. But we had that huge bullish momentum to the upside, which is a nice continuation. Good little play for today. You know, depending on if you did get involved in this, a couple of are available. You know, decent moves to the upside across that kind of 6-7 bars. I'd say 9, but we're pulling back on 2 of those, so we don't need to worry too much about those. Coming down into the M2, we did get a base. So if you trade bullish flag patterns, I'm not saying you do, but if you did, there's a kind of a continuation pattern there. Nothing really much done. On the M1, that pattern's a little bit cleaner. And you can see that we've got that there. So we've got that continuation to the upside. No retest. So you would have realistically probably not traded this unless you trade the breakout or you're just purely trading momentum. I know some people that trade specific levels would have just taken the breakout, the close. They would have looked for a close above this, had their stop maybe below the level, and then obviously looked to capture 1R, 1.5, 2R maybe, even 1 to 1, 1 3/4. So current pattern that's developing now, again, similar to a bullish flag. We've obviously got a descending bullish flag. So similar scenario, how you're looking to trade this, entirely subjective. You can either trade it from these extremes like this, which, again, this is hindsight paper. We're just showing you how we would take an extreme trade. Your stop realistically would be somewhere at the lows that potentially would deem your position invalidated if the low goes. Now, remember, when you're trading patterns, you will get fake breaks to either side before the continuations to the upside. or to the downside, you'll get those fake moves. Like I said, there's 8 different variabilities of a trade idea, specifically from patterns. Now, had we have traded the extreme, we trade it from there. If you're looking for momentum, you would wait for the break, look for some form of continuation, a close above the pattern, and then that next candle you want to see break above that previous candle like you did here. So if we were to, 1 second, if we were to pretty much look at those two, it's been a long time since I mirrored candles. Give me 1 second. I can't remember what section it's on. It might be on this one. No, it's not that one. Cool, it's been a long time since I've mapped candles. Give me 1 second. If anyone can remember where they are, drop it in the channel for me, please. I can't see it. Well, I can see polylines. Not interested in the polylines. It's got to be ghost feed. All right, cool. 1 second, sorry. Cool, it's been a long time since I used ghost feed. Give me a second, please. See if it works. Nope. Let me do forecast then. So if we... Come on. There we go. Right. Oh, okay, so it's done what we... Wait. We're fine, actually. We've got the break now. I didn't see the break, so I was pissing around. So we had that break. Essentially, you would have taken this long. Let me get rid of this one. So now, potentially, you've got those continuation traders looking for a longs. Current candle's looking a bit like it wants to reject it. Obviously, as long as it doesn't take the low of this candle and it breaks the high of this candle, those traders that are trading this will stay fairly comfortable in that idea, right? So you've got that first initial move of the extreme, and obviously I know that we hit this in hindsight, but we hit it when the candle was here, not here, not here, not here. So you can see that we're already very much in the money on that move if we would have taken that. Had we have been looking for 1R, 1R is just slightly above current price. 1.5 is about here, so we'll rock it about there. 1.5 is seemingly a good position for our day traders. Had you have obviously been looking for that momentum, you're in the trade, you've had 2 consecutive closes, you've now got that close. Remember I discussed the candle closure above that candle wick? We've got that close. We want to see a similar scenario here now. We want the low of this candle, to be protected. As long as this candle's protected, this price should stay higher. Obviously, if we get a rejection like this, then that does signify that price is going to want to pull back like this, but that candle is looking indecisive at the moment, so we can't confirm that. Looks like we're moving on to a new candle in momentarily. But let's watch that PA. We'll decide in a moment how this is, and I can react to it accordingly for you. Again, as long as the low is protected and the high goes, we would want to see either sideways price action or further upside, as long as that low of this candle is protected, this candle here. So indecision candle, as long as this low is still protected, we're still trading upside, we could just get some form of sideways price action. And again, we just want this low. Let me make it a little bit bigger because I don't want to keep repeating myself. We want this low to be protected, and we want this high now to go. So we can continue with that idea for now. Obviously, the extreme longs are available. We've had that initial reaction trading higher, so we'll keep an eye on that. But that's pretty much it for the S&P. Obviously, upside expected into 6,900s. We'll keep an eye on that. We'll maybe revisit that momentarily. Now, let's talk the DXY. So we will continue to say that the DXY is pretty much under pressure, everybody. We're testing that 96 handle. There's a lot of uncertainty at the moment from a legal perspective around that US trade policy, which is weighing on the greenback. So we are going to see somewhat continued uncertainty in the dollar. It will obviously put pressure on the DXY. it will obviously put pressure on the euro versus the dollar. So just bear that in mind. Obviously, we had that paper trade idea on Friday, that long, obviously that long played out, but you'll see that it was short-lived. And not short as in we got short, it was short-lived as in we got that 1-to-1 ports in the euro dollar would have played out very similar, not identically, but very similar. We would have got that 1.5 long or the 1.5 short in the euro. Then, of course, the markets flipped again, continuing that discussion around US trade policy uncertainty, geopolitical uncertainty, macro uncertainty, US and Iran discussions, etc. So obviously there's a lot of firestorms around the markets at the moment. DXY obviously did try to break and close above, which we got a small break. It's come back into respect a previous area. Obviously, we've probably got that hole we could look at because we've got some imbalance, which some of you call IFVGs, which I think VG means value gap, but I don't know what IF means. Imbalance. I don't know. If anyone knows what IFVG means, please type it in the chat because I don't know what the IF means. So obviously we've got that reaction of the demand. 97 and a half's pretty much being the level that we're looking at. We could be looking to target 9800s again, that 98 big round number psychological level. We could be looking to target that. So we'll keep an eye on that specific level. Again, volatility is going to be there. That fundamental policy data that I've discussed on a geo and a macro basis will obviously continue to kind of drive the theme and the uncertainty and driving fear around investors. Obviously, on the back of that, we'll take a look at euro dollar, because the reason we can do that is we can actually go down into your lower time frames and call the moves a little bit better because we can't trade the DXY. Now, on Friday, after that initial move that we took the shorts from, we did see a gain of about spot 3%, so 1/3%, traded out. Again, that actually happened again this morning, and we're now starting to see euro dollar try to break 118.30. Obviously, it's rejected at the moment. We're sitting at around 118.10, but let's drive down into the M15 initially just to show you what happened from last week. So obviously early on Friday, we had that move down, very short-lived, huge push to the upside. And then, of course, we continue to grow throughout the session. The good thing here is what we can see is we had the shorts, and we discussed this, shorts going into this area. Again, we've got imbalance, inverted inversion fair. Cheers, Des_USA. Appreciate it. Again, I don't trade ICT, so I haven't got a clue. Some of his educational topics. So we had a huge push to the upside. Demand is obviously in control. Resistance is failing. Supply is holding. And we've got nice breaks to the upside. I'll just draw some resistance levels here. As you can see, we'll thin them out now because we're not looking to discuss that in any great detail. Demand is in control. We push up. We come back into that level during the US session. And the momentum is obviously there. So what time is this? About 5:30. Could you still trade it? Yeah, you could. US markets are still open. European, UK markets have obviously closed for the weekend. Still ample opportunity. Okay, the fair value gap failed. All right, I see. Interesting. We'll talk about that another time, Anthony. So next comment is, why is supply holding when demand is in control? So you can see the market here is putting in lower highs. Equally, the market is also putting in higher lows. So we're ranging, not the cleanest of technical patterns, but it is an ascending triangle as we see it. Market obviously is balancing, it's rebasing itself, looking for continuation to the upside. Trading out of that into Sunday's open, Asia would have potentially been long. Asia gets long, trades through the session. We start to round out around mid-morning into European open. So market was clean, very, very clean. You know, we had that sell-off throughout European, and then we drifted up to the upside. Obviously, euro strong, dollar weak throughout that entire session. lovely end to the week from a risk perspective. And as we kind of came out to the end of the week, what did you see? Less buyers up at those levels, selling out of the market, trying to flatten their position because they don't want to be exposed to market uncertainty. Where do we see markets going this week? Let's trade out to the 4 hour. Obviously, as you can see on the higher time frame, lower highs are continuously being put in on that front leg. We've got a rejection off of that 118.50 level. I don't necessarily think it's the best reaction. We did obviously put a lower low in, reacted from that demand. Could price be expected to trade lower this week? I mean, I know some people are looking for shorts on the euro, and they will be expecting to do that. But we remain inside pretty much a month worth of consolidation. There's been some really good intraday trades. There have been both longs and shorts. At the moment, the market obviously looks like it wants to go short. However, I would be favouring moves to the upside. I would be favouring maybe 118.5s heading into March. That would be quite a nice target level, 118.5s, maybe 119. As we drift through March, we start to see kind of expansion on risk. That's where I'd like to see it. Do I want to see euro back up at 120.5? Yeah, I do. I'd love to see euro back up at 120.5. But it's going to struggle. It will struggle. Any comments on euro dollar? Anything you can see differently? Let's go down into the M5 while I wait to see if anyone does comment. So reacting off of that big supply level that we were discussing, we had no break, so very, very range bound. So I'm going to draw this. So we had the bullish push up, no break, lower high, higher low, lower high, and then we get the break. That's clean. What then happens? Supply takes control. So for a confirmation that we want, we would ideally want to see supply taking control and respecting this level. And then obviously you're looking for reactions from here to get short. You're not looking to get short in this level. You're looking for reactions from that level to get short, okay? Because getting short from that level, you will find that your probability decreases, because what are you doing? You are trading or hitting a trade against momentum. Even if it's right, okay? Even if it's right, you're still hitting a trade against momentum. What you're doing is trying to call the top on that type of trade. And it's not necessarily the top, it's the top of that move. You're calling the top of that move. You're trying to fade momentum. And that's not a bad thing. But it is very difficult to do when you don't have the right tools, okay? And I mean squawk, volume, institutional levels, institutional understanding, big order books, big knowledge about what's going on behind the scenes. When it comes to like the fourth market layer in stocks, single stocks, in securities, when you're seeing the fourth layer, you can execute behind the scenes into deep market liquidity through specific boxes, specific areas, and you have minimal price discovery with minimal impact on market, right? Whereas you're not going into the first layer of the secondary market, or the second layer or the third layer, depending on obviously where you're. But if you're trading the first layer of the market, which is obviously your listed stocks, not your OTCs, your listed stocks, but you're trading it on an institutional level through the fourth market, you have minimal price discovery, minimal price impact. And that's how you're doing it, right? You're layering into the private part of the market rather than going in. It's kind of like, it's not, so don't get on your high horses about it, but it's kind of like when you'll see kind of tender offers coming into the market where private equity firms or VC firms or certain investors will try to go and buy out an issuer from their own company. Rather than forcing the hand, they'll try and do a takeover. And what they do is, rather than going to the open market, i.e. the secondary market, and buying shares that are listed on the open market, they'll go to holders of the markets and big investors of the market and say, listen, we're doing a tender offer to buy, I don't know, 20% of the company or 10% of the company because we want to take control. So it's kind of like that. It's not, but it's kind of like that for those that need to know. Wow. It's rare to get it in this. It's rare to get hay fever in many other countries. When I'm abroad in European countries, enjoying the European sun, or when I'm in the US, I rarely get it. But in the UK, this somewhat pollen attack, whether it be tree pollen, grass pollen, flower pollen, dust, just kills me. So when we get that price coming into here, we're not looking to get short at this level. We're looking to get short from that level. See what I just said there? We're not looking to get short in that level. We're looking to get short from that level. Okay? So as we start to trade away, there's a couple of contemplations. Do we get short because of momentum? Do we wait to see what happens with price? Do we look to see some form of continuation to the downside, like so? Do we get short here? Do we get short after this? Do we get short after this? Do we go, right, okay, we're broken, retest, continuation, broken, retest. There's a number, there's probably 4, maybe 5, at the very minimum, ways to get short the euro on that idea. Now, the reason I'm saying it is because the front leg has shifted. Initially, we had that range, right? We failed to break higher. We failed to break lower initially. Then price has broken lower. We failed to take the highest. Supply is looking to take control. We then get pushed to the downside. We get a reaction. Supply then confirms in control. We then get the ability to go short. So what time is this? 6 a.m. So by Frankfurt Open, if you were trading the European Open, there's a lovely available short or 2 inside that move. Again, where you get short, entirely up to you. You know, up to you entirely. But there's an availability of shorts there. I mean, that's quite a nice trade. Looking at 117.60, 117.20s, depending on the momentum, when alerts are triggered, anything above 118.50, I'll be taken out for break even and then turn attention to possibility for longs. Okay, so you're still slightly in the money at the moment. Were slightly in the money at the moment around that European Open. We're trading down quite a nice level actually. 41s and 6 pips to the downside from your shorts if you break even at 50s. Obviously, if we look at the weekly, you can see that we're just printing lower highs, lower lows. Obviously, one consideration is obviously since that low was put in here, we've obviously got that. We're starting to make that higher low print. So the low originally would be, 109s would probably be, if you're looking for shorts, about your first target area, if you're looking for a higher low to be printed. And it's not certainty. That's just a higher low printing in the market based off of a subjective ascending trend line support level. 110s is obviously a big round number. And if we just get a horizontal level, we could probably see, how many times the market's trading in and around that 108, 110 level. If you've got, look, all along here, we've got supply and support and resistance all the way through. So pretty much your median. Obviously on FX, you have to bear in mind that FX is a mean reverting instrument. Traditionally, you can still make money in FX. I'm not saying that. But traditionally, if you're looking for something that's a little bit, the word easier isn't the right term, but something that's not mean reverting, that can trend a little bit nicer, you're going to be looking at your indices or metals. Not all commodities, but metals. There are obviously certain commodities that do trend fantastically. You're looking more so on your futures side. So futures CFDs like corn or natural gas or coffee, not necessarily your WTIs or your Brents or crude overall, but obviously your certain commodity-based markets. Like if we look at gold, which we'll take a look at the moment, actually, we've covered euro. Anyone else want me to cover anything else on euro, or would you like me to jump out into metals or maybe another cross? I can discuss that. I can be quiet for a moment or two while some comments come in, if they do. How's the quality of the screen today, everybody? Is it a bit better for people? How's the quality of the stream overall? Is it a bit better? Much. Wicked. Okay, so it could just be the fact that the screen's too high powered for such a stream. That's okay. That's good to know. All right, so let's take a look at gold. I mean, weekly is obviously still to the upside. Weekly put in a nice move down to the daily. Oh, my wife's having trouble with the coffee machine. That's funny. All right, so obviously, I say obviously, sorry, I don't mean to. We do need to be mindful of this supply level. It's not strong, but it is the high. 5,400 to 5,600 could be a pivotal turning point in the market. This low is strong. We would need to see this low go and then supply to react around that 5,000 level for us to continue shorts. If that was the case, the momentum at the moment is clearly to the upside. We had that nice reaction from that 4,400 level, which is where we were talking about getting long from when we was trading at around the end of Jan on Thursday. So I'm seeing, trading into this supply. As we drift down into the lower time frames, we'll be able to see that bullish momentum and seeing that demand is in control. So whilst we just need to be mindful of this supply, overall we remain bullish, remain long on gold. We'll come down into the 4 hour to look at how we moved out of those levels that we were talking about on Thursday and Friday of last week. I don't like when candles do this. So we had obviously that huge, I said obviously again, had that huge bullish move to the upside. We had a range coming out through Thursday. Fridays we traded out of that range and pushed to the upside. And we're currently reacting underneath that 5-2 level. So we'll keep an eye on that. Broke range to the upside of my charts and retesting the breakout. Yep. Yeah, I see that. We've got that retest there. So as we drift down into the lower time frame, again, there's nothing much more to be said on the 4 hour. We're covering it pretty cleanly. So Thursday's idea was a reaction out of this supply into this demand, which we got. I don't know what time we got that. We didn't get that until 3 o'clock on the Friday. So we call these levels quite nicely, guys and girls. Look. We don't touch this analysis after the live stream, everybody. So we had 2 discussions on Friday about the decisional demand here, which, I mean, come on, look. We had that level here, pull back into this decisional demand, bullish move. What do we get? We got a pull back into demand. We got a bullish move. It then pulled back into the extreme of the demand, which we had marked out here, just above the level. And then we had a bullish reaction. I mean, I don't know about you, but my analysis is bang on. Bang on. And I like it. Not to blow smoke out of my own trumpet. But we had that initial reaction, move to the upside. Again, if you were long this, you would have potentially either taken your fixed R, a break even, or a stop loss. And the reason I say that is because, subjectively, why did it react here? Again, we had that data come out. So maybe you would have been flat about the FOMC minutes coming into it. You would have got out. You'd have closed the week. Reaction again to this, you wouldn't have been long off of that. You would have been waiting for momentum to build throughout the US session. And so it did continue all the way through into Asia. Very clean. Very clean. What then happened? Coming into mid-Asia mornings, rollover, starting taking profit, reaction to the down. And now we're just waiting. That's all we're doing. Now, really, really nice move. How would I see this? So I'm going to just do a few different ideas for now. So we have support at 51.30s roughly, and we have descending channel trend line resistance trading through the lower highs. We're getting somewhat of a corrective move here. Now this does potentially look like it's forming a bullish flag, and then we'll then trade higher. Initial targets will be around 51.75. It will depend on how we trade over the next 1 to 2 candles. Maybe 3 candles actually, because what we'll be looking for is, how does this candle close? Does the next candle then trade lower and the next candle trade lower? Or do we get, next candle does this, we then get this, and then the third candle rockets to the upside? I saw a rocket earlier, so we'll see if we can, we'll pull that out of the bag. So do we get a 3 candle rocket, and then we'll see momentum continue to the upside again? I would expect markets to be fairly quiet until we head into the US session, and then maybe coming into the US session we'll get an Elon Musk starship to the upside. But again, I just don't like how we're seeing the higher lows print. So this is why I don't try to call tops or call bottoms. I look at levels with objective moves off of that level. So whether it's a support or a resistance level, a supply or a demand level, and then I try to trade from those levels, looking at where the ATRs are, the pivots, looking at how volume gets encompassed and incorporates into it. Obviously, this candle closed just on the level. Current candle showing further indecision, so we'll keep on looking at that and wait. But that's pretty much it on the day. I think, if we look at where the markets are, very uncertainty, very uncertain, and a lot of uncertainty around everybody. Sorry. Chart went. My whole chart went. So we're getting some good. I was waiting for my internet to pop back up. Where a couple of my longer term investments are, including Pokemon, where they're sitting at the moment from the weekend. There was a big event over the weekend. Good. So what are we doing now? What are we looking at? So realistically for me, I'm going to change my camera quickly because 1080p doesn't want to be flagging, doesn't want to work. It keeps freezing. I've got to look at maybe one of my satellites because I think my satellite's causing me issues. Overall on the market, again, obviously looking at where price is right now, coming down to the M15 on Bitcoin. I think markets want to see that recovery into that previous failed level. I think we want to see 67,156. What does everyone think? Do we think we're going to see 67,000 again on Bitcoin for now this week? We're not too far away. 67,000. Not too far. 669 to the upside. So, general comments. Obviously, just be careful. Obviously, Asia's closed. US markets will, of course, want to see that over weekend risk before I really want to start playing out. So I'll wait for the markets to come in. If you haven't already, I appreciate you sticking around on the stream. Obviously, I know we had a bit of technical difficulties there. As always, if you are, again, thank you very much for liking, for subscribing, for turning your notifications on. If you haven't, go and do it. Whether you're on Instagram, YouTube, Facebook, X, like and subscribe to the channel, like and subscribe/follow to the social media page. Turn on your notifications, whether that's the bell indicator, just to keep an eye on what we're doing. All of the content I release Monday through Friday. I live stream Monday through Friday. I don't know whether this is the right time. If you want me to do it earlier, just send me a buzz, let me know, drop a comment in the recordings or in the live stream comments so that we can start live streaming at a preferred time. I want the most amount of people to be impacted by our live stream, where we provide real-time education, breaking down the markets and analyticals across fundamentals and technicals in real time. $66.4. So I think without further ado, as always, trade safe, trade smart, and trade Seacrest. Join us at seacrestmarkets.io and look forward to seeing you on the live stream tomorrow. And if you're watching the recording, a big shout out and a big thank you to every single one of you. But have a good day. Trade smart, trade well, trade safe.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets lighting the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets aligned. Traders power, no fear.